What's up, traders? Robson Hashida here. Today we are going to talk about time. So let's go. So with trading, time is everything. Everyone only focuses on price action by using candlestick charts, bar charts, etc. I don't mean everyone, but most of us, when we look at a chart, right? So most of us, we use candlestick charts. Some of us, we use bar charts, and some of us, we use other kinds of charts. So traders apply all sorts of indicators on their charts. And sometimes you look at some traders when they trade and you look at their charts, they're using so many indicators that I have no idea what's going on. So have you guys ever seen this kind of thing? It's burning, right? So it's a chart that has so many indicators, so many lines, so many colors. It has more colors than a rainbow. And it has many things on the bottom as well, and you get confused because you don't even know where price is, like how much euro dollar on the daily chart. How much is it trading now? I have no idea because there are so many lines that I don't know where the price line is, okay? I don't know where the candlesticks are anymore. So I get confused, and so do you, all right? And people try to predict how price is going to vary by applying many indicators. So you're trying to predict how price is going to vary, right? And you apply many indicators. And people try to predict how much, but they don't predict when, okay? Have you ever heard of someone telling you, oh, Bitcoin is going up, or Bitcoin is going down, or oh, silver is going up, or silver is going down? And you ask them, okay, so how much? And then they'll tell you, okay, I think that the dollar yen pair is going to reach 120, all right? Or 110 and blah, 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 okay? So they always tell you how much. And then you ask them, but when? And then they don't know. They say, oh, eventually, or after 2 weeks, within a month, They give a very rough idea, or most of the time they just don't know. They will just tell you, oh, it will go up, or it will go down, or they will say, wait and see. Have you ever heard that excuse? Oh, wait and see, it's going up, blah, blah, blah. So people don't care about when, but when is the most important thing. When people look at a chart, the first thing they look at is price, which is correct. It's correct, it's not wrong, it's correct. So you need to know where price is. You need to know how much it is, right? So that you can buy or sell, so that you can enter your position. And that's the most important thing. That's the y-axis of a chart. But the thing is, a chart is made of two lines, is made of two axes. So there is the y-axis that tells you the price, but there is another axis that is the x-axis that tells you the time. But people tend to forget about the time, okay? Time is really important. And the biggest wrong assumption that you can ever make is whatever goes up goes down and vice versa. And if you have been trading for months or years, if you are an experienced, very experienced trader, I know that this is the biggest wrong assumption. But if you are a beginner, you tend to not know, or you even tend to argue with me. You may say, oh no, but whatever goes up, it will eventually go down, and blah, blah, blah. Okay, it may eventually be the case, but have you ever heard of something called margin call? Okay, so before it goes up again, or before it goes down again, okay, before it bounces back, you're going to die, you're going to be killed. Your trades are going to be terminated, okay? So this is, if you have ever experienced a margin call, you know exactly what I'm saying, and you will not make this mistake again. But if you are a beginner, please learn this, okay? I'm going to give you now a very good example, and it's a true story that happened with this person called Nick Leeson, okay? He used to trade for the Barings Bank that doesn't exist anymore because of him, and I'm going to explain what he has done, okay? So on January 16th, 1995, Leeson placed a short straddle, essentially betting that the Japanese stock market wouldn't move significantly overnight, okay? And you know what? Actually, he made, before that, he made some other trades, and he was pretty successful because this strategy works pretty well. Basically, what he did is a short straddle. So you're going to sell, okay? So it's a short. So you're going to sell a put and a call at the same price, and that means straddle, okay? So you're going, when you're trading an instrument at the same, and you're trading and you are doing something with the call and the put at the same price, that's called straddle. And you can buy or sell, okay? So short means that he was selling at the same price, okay? And when you do that, what happens is, as time goes by, you're going to receive premium, okay? So you're going to receive money as time goes by, as long as it doesn't move significantly overnight, okay? So what was happening was that he was expecting that the Nikkei would stay more or less, okay? More or less at the same level the next morning, and then he was going to close the position and he was going to get some money, as he used to do, okay? And this was working pretty well. But there is one thing, okay? One thing that he didn't predict, that he couldn't predict, because that one thing was related to Mother Nature, and he would never be able to predict this. So what happened is that he was really unlucky, because this is the Kobe earthquake that hit early in the morning on January 17th. So it was the next morning after he had placed his trades, okay? So that sent Asian markets and Leeson's trading positions into a tailspin, okay? That was his first mistake that he couldn't, the first mistake he couldn't really predict because it was a natural disaster, okay? But his second mistake was that after that, Leeson attempted to recoup his losses by making a series of increasingly risky new trades, okay? Using a long future arbitrage, this time betting that the Nikkei would make a rapid recovery. So this was his second mistake. And for this mistake, he was really dumb, because this mistake actually he could have predicted, right? Because a natural disaster of such a huge scale, right? And I understand, I think he was more like following his emotions rather than being logical at that time. But anyways, this was his second mistake that he could have avoided. And honestly, he could have avoided his first mistake as well, just that he, you know what, like you should be able to have an exit strategy no matter there is a natural like disaster like an earthquake or not. You should have like a very good exit strategy that obviously he didn't have. But anyways, okay, what happened is that the recovery failed to materialize. Why? Because it was such a huge disaster that Japan lost billions and billions of money, and investors all over the world were like the market as a whole was really affected by this, and then it didn't have a speed recovery as Nick Leeson was predicting that would happen. Instead, it didn't recover. So Barings Bank, which had been the UK's oldest merchant bank, was declared insolvent on February 26th. Okay? So this is what happened. And then, so this explains to you guys that you should never rely on that statement that whatever goes up goes down, or whatever goes down goes up. Because you know what happened? Then what happened is that many years later, over 22 years later, so on October 11th, 2017, what happened is that over 22 years later, Nick Leeson posted this tweet, okay? On his Twitter account, he said, oh, the Nikkei 225 at highest level today since 1996, probably not far off my break-even point, if only they had waited. Of course, this is a joke, of course. I understand it's a joke, but come on, like you don't make this kind of jokes, do you, right? So, yeah, so you guys think what kind of investment you're going to, like what kind of trading, right? What kind of trading that you put money on the Nikkei stock exchange or Nikkei index, and you wait for 22 years to recover. It's so I hope with this very like true example, a very good example by the way, make finally you guys understand that you shouldn't rely on that statement. And the most important thing here on this lesson, what I want you guys to remember is time, okay? After price is probably the most important things together with volume, okay? So always focus on price action, time, and volume, all right? Don't forget time, don't forget. Please remember. So this was my lesson for today, and I see you guys on my next video. Ciao.